It's one of the fastest growing markets out there, but many retail investors are still ignoring it.
Gold went from $1,800 an ounce to closer to $3,000 an ounce. Retail really had no interest. That's now beginning to change.
But this really could be just the beginning.
I think that we'll probably see $8,000 to $10,000 gold by the time this all ends.
Brett Eversole with Stansberry Research shares a list of 4 metal stocks that have a long way to run.
So I think that this is actually a very strong market environment, but I don't think we're anywhere near the end yet.
Will that potential upside be enough to finally pique your interest? Let's dive in. Today we have Brett Eversole with Stansberry Research with us. Brett, so excited to have you on. You just finished a really interesting talk for the group here at the conference, and we are talking today about 4 metal stocks to watch for investors. We've seen so much action in this market. So before we get to the names of those stocks to share, let's just talk about why we're seeing so much action in the metals right now.
Yeah, it's been exciting over the past, couple of months, but really over the last couple of years. We started writing about this back in 2022 when it first really broke above $2,000 an ounce, and that trade has been going on for a long time. And what's interesting to me right now is that there's a shift happening in the gold market, where from 2022 to 2024, it was central bank buying that was driving prices. So it was major global central banks. Throughout the 2010s, they started to divest their gold holdings. Now, over the last few years, they've started to reverse that trend. They started selling their treasury bonds and buying gold. But what happened during those 3 years, from 2022, 23, and 24, is that retail investors had absolutely no interest in this market. Gold went from $1,800 an ounce to closer to $3,000 an ounce over that period, but retail really had no interest. Here in 2025, that's now beginning to change. So retail investors for the first time have actually started to see what's going on, see these higher prices, and really start to move into gold. One of the ways I like to look at that is through shares outstanding of large ETFs. This is one of those things I think most investors don't realize you can look at, but when you have an ETF, they create and liquidate shares based on investor demand. So if investors are all trying to buy a gold ETF, well, they'll go and create more shares to fill that demand. So we saw shares outstanding for GLD, which is the largest gold ETF, collapse from 2020 to 2024. They bottomed last year, and now they're starting to rally in a big way. So that's one way to see that retail investors are really starting to get in on this trade. And then as a kind of an aside to that, in any major boom, what happens first is you have smart institutional money that kind of gets things going. And then eventually retail investors come in, they see that money's been made, they see that there's opportunity here, they start to flood in, and that's what turns a boom into a bubble. And that always ends poorly, but between now and then, there's a lot of money to be made. So I think we're at the early stages of the gold bull market going from boom to bubble, thanks to these retail investors who are just now starting to get interested. So we've seen a big move, but I think there's still a lot more upside from here.
This is so interesting because I know you're talking about actual numbers and you're looking at things, but just anecdotally from the comment section on these videos, we have had investors and retail investors who have no interest in gold. If we talk about gold, no one wants to hear about it. But over the last couple of weeks, even last few months, retail investors are starting to pay attention because I think the price of gold makes it hard to not pay attention. You really have to pay attention when there's this much money moving there. Again, right before we get to the 4 names that you have for us today, I just want to talk about how much higher you think the actual gold market could go.
All markets are all about cycles. Everything is cycle related. And so anytime you're in a major long-term boom or a major long-term bust, well, you can go back to history and figure out how long do these things usually last? How high do prices usually go? And so the last major gold boom happened in the 2000s, started about 2001 and ended about 2011. It was about a 10-year cycle. Over that time, gold rose about 600%. So right now, we're about 7 years into a gold cycle, with the bottom happening in 2018. Since then, we've seen gold rise about 300%. So that tells me the gold price could roughly double from here. I think that we'll probably see $8,000 to $10,000 gold by the time this all ends. And I know, especially over the past 4 to 6 weeks, we've seen a massive move in prices from $3,500 an ounce to now we're pushing $4,400 an ounce. There's probably going to be some kind of a pullback, but that doesn't mean that the long-term thesis is broken. I think it's absolutely not broken. I think probably gold is going to rally for another 2 or 3 years, and we're probably going to see that $8,000 to $10,000 price by the time things peak.
That is a lot of growth ahead of us here for sure. Now, there's buying gold itself, but then there's also looking at which stocks you can do to get into this metals market that's going so crazy. So let's get to that first stock that you have for our viewers today.
Sure. Well, I'll say up front also, it's not just gold. Also, I think silver is a massive opportunity. And I want to say that because some of these are silver opportunities that I'm going to share as well. Silver tends to be kind of like gold's wacky cousin is how people think about it a lot. It's generally a lot more volatile. It kind of does its own thing. Gold is really only used for investment purposes. uses and for jewelry. It doesn't really have industrial uses. Silver has some, so there's always supply, demand problems going on. It's kind of a wacky market in a lot of ways. But in these boom times, silver tends to really soar in that retail portion. It's the kind of thing that investors know can go up a lot more than gold when there's a rally going on, and so it tends to catch up at the back end. So I think we're getting to that phase in silver as well. And then also, one of the ways to kind of value silver is versus the price of gold, so like the gold to silver ratio. And if you look at that, where we are today versus history, I think silver could probably kind of like 2x gold's return. So I think if we get gold at $8,000 an ounce, we could see silver go from 50 to 200 or something like that. So I think there's massive upside in silver itself. So one of the stocks that I really like is called First Majestic Silver. It is a Canadian company, but all their operations are in Mexico. They've got 4 mines, primarily silver producer. Around 60% of their revenues are from silver. And they just have a history of absolutely soaring during metals booms. During the early 2000s, they were up 500 or 600% in a couple of years. Coming out of the financial crisis, they were up a couple of 1,000%, I believe. And so this is a primarily silver producer that I think is going to do incredibly well.
A really interesting first company. Again, a North American miner, which I think a lot of investors are looking for too. Let's move on to that second name. Is it still in silver or is this one switching to gold?
So we'll do another one that's kind of a little bit of both. The second one is called Hecla Mining. The ticker is HL. And they are, again, primarily a North American producer. About 50-50 gold to silver revenue. So you get some gold and some silver, similar to First Majestic, but a little closer to even. And this is just like a company with strong assets in the US, in Canada, that is positioned to just see major growth. Because what's great about these mining stocks is that they have this operational leverage to gold prices or to metals prices in general. Their costs are relatively fixed, but when metals prices, that means when metals prices go up, all of that increase essentially just flows to their bottom line. What's great about Hecla is that it's a very low-cost producer. I think that their cost to pull an ounce of silver out of the ground is around $13 an ounce. That's about half what the industry average is in the mid-20s. So they've got strong assets in good places, and they're a low-cost producer. And in a rising metal environment, these are all the things that you really want to see.
Yeah, those are some really good fundamentals to look at with that company that make it stand out from some of the others. Also so interesting to see that as the price of gold or the price of silver goes up, it just goes straight to profits for these companies. So I think for investors who don't want to necessarily deal with holding gold or holding silver as an asset, this is such a great way to get some of those gains. Let's get on to that third name that you have in this metals market.
Yeah, so the third one really does what you just said as far as like increasing profits in this market. It's called Equinox Gold. The ticker is EQX. And they are a company that couldn't be more perfectly positioned for this moment we're in right now, in that for the past 3 or 4 years, they've spent a lot of money to grow their production. They bought assets, they've invested in their current assets, and they're growing production dramatically. So their production is going to grow from maybe 800,000 ounces this year to closer to like 1.2 million ounces in 2027. Through that period, though, they're making this switch from this growth mindset where they spend a lot of capital to a profitability mindset. So their costs are going to fall from around $1,900 an ounce to pull gold out of the ground to $1,500 an ounce. So it's like a perfect like trifecta of things going on. Their costs are falling, their production's rising at a time when metals prices are soaring. What that means is this company is going to turn into this just like cash gushing machine. I think last year they had somewhere in like $50 to $80 million in free cash flow. Next year, that's going to grow to about $1 billion in free cash flow. So they're in this position where, because of this confluence of events happening in the metals market and the way they position themselves, they're just going to see massive growth in profits.
Yeah, that's a lot of increase in the cash on the books. Such an interesting company to look at. I think one thing you brought up there with any of these stocks, when you're looking at there's so much to be made, the more silver, the more gold that you can mine. Are we seeing a lot of these companies starting to expand their operations, starting to add some more risk, some more debt to try and build more? Are any of them kind of working too hard that way that they're getting too much into debt?
That hasn't happened as much yet. And I think it's also important, generally speaking, when these cycles go on, as you get very late in the cycle, you see, especially the majors, make very bad deals. This has historically happened dramatically. We saw massive amounts of terrible mergers and acquisitions that happened around 2010, 11, 2012 in this space. And then 3 years later, Barrick would come out and write down $10 billion a quarter for 3 quarters in a row or something like that. I like to look at these, not tiny producers, but kind of intermediate sized producers, because they can't raise capital as easily. They're not quite as well known. They're a little more disciplined in their approach. And so you might not want to buy the largest stocks because they're just this big kind of jumbled mess. I like to find these a little more focused companies so that are a little smaller, a little more disciplined. Usually the CEOs have been around for a long time. They've been through these cycles. They kind of know the mistakes not to make. So that's always a problem that, historically mining, it's a really, it's just pretty much a bad business. It's hard to make money long term in these kind of companies, but at the right moments with the right people, you can do really well. And I think we're in one of those moments right now.
Great. Well, you've given us 3 awesome names so far. What's this last company that you have for us?
Yeah, so the last one is a company called Seabridge Gold. They've got a lot of assets in Canada, and they have one specific mine called KSM, and they've been developing this for 20 years or so. Seabridge started in 1999. That was at the end, near the end of a 20-year bear market for the price of gold. Their thesis was there are tons and tons of assets that exist that are essentially worth nothing now, that if gold prices move higher and we spend smart money developing them, will just turn into massive value. So KSM is the kind of the biggest winner that they've had over that time. And they are in the process now. They've been working for the last few years to kind of get a joint venture partner on that asset, because it's going to be $6 or $7 billion to build this mine. Now, the net present value of all the metals that are in the ground are probably $25 or $30 billion. So this is a good investment, but it's a big undertaking. So they're working on finding a partner that will finance that, oversee the build, and they can essentially just be kind of like a, not quite a silent partner, but they'll a profit sharing partner on the back end. They've been working on that for a couple of years. I think that when that JV deal is announced, and from what Rudy says, they're getting very close, this is a massive upside catalyst for the stock. The other thing, because they only have gold in the ground, they don't actually do any production. That's kind of like the highest way to get that leverage to the gold price. And historically, they've been very leveraged to the gold price because of that. So what that means is, gold goes from $3,000 to $4,000. The economics of all of that stuff in the ground just skyrockets, like absolutely skyrockets, even more than a producing company. So Seabridge is in a position where you can kind of win 2 ways. You've got the rising metal prices that are underway, and then second, you have this potential for a JV deal. And that's a little speculative, but it's something I think is going to come through, because the KSM project is going to be one of the, I think, 5 largest gold producing assets once it gets going. And the major gold producers for the last 10 years or so, they haven't been able to backfill their production. The problem with any kind of natural resource business is you pull the stuff out of the ground and now you have less resources and reserves in the ground to pull out in the future. So you have to find new assets and backfill those reserves. They haven't done that very well. And so KSM is a massive gold and copper project that would allow a major to backfill all of those reserves that they've been pulling out of the ground for the last decade. So the timing is, I think, very right for them to get this done. So I expect that to happen. And I think that's kind of, you've got 2 major upside catalysts for the stock because of that.
Yeah, such an interesting company. And I know it's all about choosing the right company with the right fundamentals. And that is a tool that you have at Stansberry Research called Stansberry Score. You can scan the QR code right now or click the link in the description to get a free look at the recommendations that Stansberry Score shares on whether now is the time to buy or sell some of these metal stocks, but really any stock in the market. This is a chance to get a free look at the recommendations from this tool on Stansberry Research. Again, another great way to look at these stocks and get a deeper dive into the recommendations behind them. I want to get to a final question on just this whole market in general. We see gold and silver prices, metals market just going crazy, and you've already said you expect it to continue. What does that say about the overall market in general and kind of the state of the economy right now that we see metals rising so much right now?
Yeah, it's interesting. That's kind of become a topic of conversation over the last few weeks, I think, especially as this kind of gold boom has intensified. But this is not a new phenomenon. I think people forget that in 2024, the stock market was up 25%. Gold was up 30%. In 2023, gold outperformed the stock market. So this has been happening for a couple of years. I think people like to read into that a lot more than maybe is worth being read into. I kind of think of these as different asset classes, and you have to analyze them differently and think about them differently. Maybe it's slightly weird in a historical context, but it's been going on for the last couple of years. I don't think that this is some big worrying sign for the overall stock market in general. And when it comes to the overall stock market, I think the opportunity there is really fantastic as well. Bull markets always climb the wall of worry, is what people say. There's always something to be concerned about. People are always looking for what is going to, jump out from around the corner and throw off all the good things that have been happening. So that wall of worry is pretty normal. But when you look at kind of the broad setup, it's just, this is a very strong global boom. One of the things I talked about in my talk is just that every major sector that matters is at all-time highs. The overall stock market's at all-time highs. The mid-cap stocks are at all-time highs. Small-cap stocks, you look at every major global stock market around the world, they're all hitting all-time highs. And I think people have a tendency to see prices rising everywhere and assume that that's a bad sign. But in reality, what you don't want to see is, if the US stock market was hitting all-time highs and everywhere else in the world was in a depression state, that would be really bad, because I would assume then that what's happening here is unsustainable. But when I see it happening everywhere, that tells me that we are in a situation where global growth is strong and global equities are strong as a result of that. So I think that this is actually a very strong market environment. And we've had a pretty incredible 2 or 3 years since this bull market began, but I don't think we're anywhere near the end yet.
Such an interesting way to look at the market, to say it's good because everywhere's going up at the same time. I love that. Great way to look at it. I think the final question I want to have before this recommendation of these 4 different metal stocks is they're clearly very dependent on the price of gold and the price of silver. Is there a risk just because this is a commodities market, right? Talk about that potential risk. And the question that some investors have is, how much longer can gold continue to climb?
Yeah, of course. I mean, they're completely linked to the metals price. There's no question about that. And so that's why, we have seen this massive move in the last few weeks. I kind of expect a cool down. I think there'll probably be a better opportunity to buy than today because we have seen such a almost parabolic move over the last 4 or 6 weeks. But I think longer term, you can just you try to ignore that as best you can. Or you wait around for hopefully a slightly better buying opportunity. But I think when you look at what's going on in this boom versus history, I think we probably have another 2 or 3 years before metals prices peak out. We're just not seeing that retail mania type enthusiasm that you would expect. I started in this business in 2010, and that was very near the end of a metals boom where gold peaked in 2011 and I think silver peaked in 2012. And when you got near the end of that, you could not consume a piece of financial media without seeing stories, ads. Everything was related to, we buy gold, invest in gold this, invest in gold that. The mining stocks were going absolutely bananas. It was not that it was just insane. It was insane from the retail audience and towards the retail audience. We're starting to see stories now. People are noticing what's going on, but that kind of mania is not here yet. And every boom turns into a bubble, ends the same way. It ends with complete mania where people think you can only make money in these stocks. We're not there yet. Yeah,
definitely not there. I haven't seen that rush like you're talking about either. Well, thank you so much. This has been really good information. So much information. I know you have even more on your Stansberry Research Scorecard. Yep. So if you want to learn more about that, again, I'm going to throw up that QR code for those who want to learn more. It's a free look at these 4 stocks that he mentioned today and has some more very specific recommendations for those. Brett, thank you again so much for your time.
My pleasure. Thank you.
Well, let me know what you think in the comments. Have you joined into this metals mania yet? Or are you still a little cautious and holding back on buying anything gold or silver related? I'd love to hear what you think in the comments. Thanks again for watching, everyone. And as always, happy investing.